Hi traders, we're looking at the dollar index here. This is an equal weighted index, that is the USD against a basket of major currencies in an equal weighted basis on a log scale monthly chart. We are looking at the recent decline here that was basically done in a week. It's now mid-month, so there's still time for this monthly candle to close and to show its final shape. In my view, we could still dip another, you could dip here below this support line by another 10% lower, and this is the scenario that we'll be looking in today, and also the potential for unfinished business here on the upside. So let's get it. So far, we are witnessing the largest bearish monthly candle since the first week of February 2016 and the first week of June of the same year. From a price structure perspective, we have to look for other dynamic trend lines related to those points on the chart, and by proceeding so, we see that the current monthly candle, this bearish candlestick that is forming this November, started at the corresponding channel interim line that originated at the open of the aforementioned February 2016 monthly candle and filled its entire candles range, resulting in a similar monthly candle. If I select here this ascending resistance and I drop it at the low that we have so far exhibited this month, we have a very similar monthly candle to that one. So if we look for further downside potential, we have to follow the second largest bearish candle from 2016, like I said, corresponding to the month of June, this one here, and we see that the low of this candle sits on an ascending support line, and this support line intersects with the horizontal resistance, now turning into or potential support corresponding to this August 2015 high. So it is this intersection here that we are basing our retracement parameters and also the timing for the eventual continuation of this retracement that could go by another 10% down below this trend line, 8% from the trend line, and from the price as we speak here is approximately 10% to meet that target. Okay, so this intersection, which is pointing to February 2023 next year, becomes an attractor for the next few months. Reason why I would not exclude is further downside in the US dollar. On the flip side of that bearish take, another upside leg can't be ruled out, especially if this descending dynamic support holds. If we close above it, for instance, or on the weekly level, if we have no close below, no dip below, no piercing on a monthly scale of this support. So if the support holds, then eventually the upside scenario becomes more likely. If we switch here to the weekly time scale, we see that the chart is a bit more crowded. We see new lines emerging here. These lines correspond to a steeper angle here seen on a weekly chart, and we can see that this new corrective process that is going on right now started here on the 17th of October, and it did start at a strong dynamic level corresponding also to this bottom here in 2016. So we have these two lines, this support line, the magenta one pointing to this intersection early next year, and this other line originating at the same point on the chart. And if we look into this reaction here, the top reaction here occurring in mid-October, we see that the price snapped back to that interim resistance from the monthly chart, pierced through this dynamic support that we are looking here at on the weekly, and reverts back down. So ideally, the confluence of these two levels comes later on in February, and interestingly, this intersection is coincident with this other intersection that we pointed out earlier here for January, February next year. The reason this is because we have these two intersections coming up here. We trace another potential resistance line on the chart, in this case a dashed line, because we don't have any contact point with it so far. And this line also takes us to another interesting confluence, which is basically an intersection between an ascending support and this descending resistance that is now formed as support, halted this last week's dip here to this level. And this intersection, we came to this intersection in the same manner as we are finding this resistance that is still potential. And we did this, and let me go here on the monthly chart to see where we got this resistance from. So this line here, this descending line that we're analyzing, this line was basically by taking this intersection upwards to this point here, and then we had this potential resistance. And indeed, on a monthly scale, we see that this was the level where we bumped against in July. Then the next month, in August, it closed at this line, and September started at this line. So it's an important line. Because of its importance, we can transport that meaning into the future, into this intersection, come up with future intersections based on it. And on a weekly chart, we see that this point also intersects here with this potential dashed line for the beginning of next year. So there is a lot of play here, either to the upside or to the downside in terms of price. We can see in both directions more or less a 10% movement from the place where we are trading right now. But on the upside, there is still a little more room and unfinished business here until we reach that upper line, this magenta one, that is the one of the top lines here from the multi-year channel. So if we bump against this interim line that started here in this large bearish candle from 2016, overcoming this resistance, then the price will probably look to the channel top line here corresponding to the swing high in 2015. So lots of possibilities here and potential to the upside, more or less 10% or 8% to this intersection here at the beginning of next year, and another 5 or 6% up to the upside. So overall, from where we are trading right now, a potential of 17% to the upside, and barely 10% to the downside. Traders holding here long positions may take into consideration any dip below this descending line here, or using this interim line, this ascending one, to trail stops along the way for more aggressive positions, and more conservative and for more deeper pockets. Probably this ascending support will be the line in the sense if we go down in cross this line to the downside. Although from a multi-year perspective, the USD will still be trading within this upward sloping channel that would probably change the long-term picture, or delay that upside scenario a little bit. We would have to see some reversal pattern here occurring at the base of the multi-year channel to come up with a bullish potential again. But so far there is still or there are still a lot of barriers to cross to get into that area. So in my view, the risk is to the upside, but there is some risk to the downside for further 10% here, as mentioned. So from a larger perspective, USD is still trading on the upper part of a multi-year upward sloping channel that is positive, and when compared to its major peers and their domestic economical situation, we still see the US dollar being the best house in a bad neighborhood. Hope you liked the video and the analysis, and stay tuned for future episodes. Bye for now. Thanks for watching.